Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address is r@fxcm.com. And today is Tuesday. It's the 7th of March. Just going to go ahead and bring up the high risk investment warning. Hi, Anna. Hey, Matthijs. Hello, everyone. Thank you very much for joining. Can I just get the 3 yeses? Can you see the screen? Can you hear me? Can you see the video feed? Just want to make sure everything's good. Okay, excellent. Thanks, Matthijs. All right, let me just keep the market commentaries disclaimer on for a little while longer. All right, and here is our, sorry, let me put the high risk investment warning on. I think I missed that. I'm going to keep the high risk investment warning on. Just have a quick read through that. All right, and here's our references, MarketScope 2.0 and tradingview.com. And what I'd like to do today is top-down analysis. We'll start off with the DAX. So I want to do the DAX, Euro. I want to take a look at the UK 100 and perhaps the Nasdaq as well. And let's start off with the trading view chart. And what we have here is the monthly chart of the DAX. And I've got the COPOC indicator here, which is a really good indicator in terms of long-term bottoms. It's really designed to find long-term bottoms. That's all it's designed to do. It's not designed to find tops. Don't use it for tops. I've never tested it for that, but just sort of eyeballing it, I can see it's not really particularly good. But I know the designer of the indicator, a chap by the name of Edwin Kopok, designed it for bottoms. And I've just gone back, and what I'll do is I'll put in some verticals, and we've gone back to the 2008 crisis. Here's a nice bottom. Here's a nice bottom. Here's another one. This one was a bit tough because we went into the this was COVID, and here's where we just hit this nice potential bottom as well. If we go back to 2000, nice bottom here. There was a slight whipsaw here, which we've seen previously. Okay, senior. So you can see it was some really good signals, and we've just turned up from below the zero. That's the idea here. It turns up from below the zero, and the DAX potentially still has some legs to it, given the COPOC. The COPOC in of itself, as we've seen, is not infallible. So don't don't give it too much weight. It's just part of the toolbox. It's a tool in the toolbox, right? So we can see that there's a nice turn up here in DAX. And then what I want to do is go through to the chart over here. And here is very interesting information as well. Again, we're looking at the DAX. We're looking at this on the monthly chart. What I've done here is I've put in our zones. These are Bollinger Bands, and this is a stochastic. And what you can glean from this is, well, this is what we call the value area. So this is where there is good stocks at value prices, and here's the growth area. So DAX has actually moved into the growth area. In other words, there was a stage going back probably to September, October last year, where the DAX really represented some really good value, and money rotated. Capital flowed into the European markets, and we use the DAX as a proxy for that. And you can see it's really pushed now from the value into the growth. And now the idea is, can we actually build off of that? The longer it stays in the growth area, which we call zone 1, so between the upper red and the upper blue, the higher the probability of price appreciation. So you can see, if we go back here, It's a nice price appreciation. Remember, we're looking at a monthly chart here. So this is over a good few months. And then if you take a look over here, the stochastic hangs around in the upper quintile. And if you take a look at this one over here, okay, and then the stochastic hangs around in the upper quintile. Well, now we're kind of moving in that direction. So there's still potential legs here. Still potential legs here. It's all about the stochastic making its way through the 80 plus areas. That's the upper quintile, and the longer it holds there, the greater the momentum, and the greater the chances for capital gains. And I want to go down through to, because we're doing a top down, so we're right at the top. Let's go through to the weekly chart here. And on the weekly chart here, we've got the trend. And we've put this in before. Here's the reference trough. Here's the reference peak. Once you've got the references in, well, here's the higher trough. Here's the higher peak. Okay. And we've just got in another higher trough. So by and large, it looks pretty good on the DAX side of things. Now, the way we can take a look at the value and growth, just before we move on to, say, the euro, is through this type of a structure. So if I just bring up our Microsoft Paint, okay. Just bear with me a moment. So this is a sort of a stock market cycle, and it could cycle between what we call accumulation, then it goes into what we call markup, then it goes into what we call distribution, goes back down into markdown, okay, and then back into accumulation. So these accumulation areas are typically your value areas. Okay. Now, if you go back to this, here would be a beautiful accumulation area. Okay. Now the question is, well, how long are we going to stay in the growth area for? That's really the key. So what we're hoping for there is a slightly different chart. We would look for something like this. Okay. We would look for something like this. Accumulation, markup, okay. Instead of distribution, we'd want this to be another accumulation, markup, accumulation. So that's what we're hoping for. And the longer it stays in the growth area, again, the greater the chances that's exactly what we're going to be getting. Let's take a look at a few of the other instruments out there. By the way, if there's any questions, go ahead and type those in. Okay, I don't see any questions just yet. Let's just go through to let's go through back to this chart. Let's take a look at the UK 100. It's not one that we've looked at in a while. The UK 100 is actually slightly different. Okay, so we're looking at the FTSE here, and the FTSE is different. The FTSE, let's put in our value areas here. And the last time we hit a value area was down here back in December 2020, and then this was really the accumulation in the FTSE. Since then, we've been in the growth side of the market. So if we bring up this chart over here, let's go through to UK 100. Okay, and this is very, very interesting now. This is a strong looking chart. You've got value. Okay. We're on the growth side, but there's a difference here between the DAX and the FTSE. What's the difference? The momentum. Okay, the momentum here has hit the upper quintile. The longer that we stay in this upper quintile region, the greater the capital gains. See, here's a nice one. Okay, so we've just hit a really nice growth pocket on the UK 100. Does it guarantee anything? I want to be very clear. It doesn't guarantee anything. There could be some economic fundamentals that unfold that stop it in its tracks. But on a technical basis, this is looking really good. And the idea here is if you take a look at the Bollinger Bands as well, there's a nice squeeze here. There's a nice squeeze here. In other words, there is, Bollinger theory says the squeezes on the Bollingers are the calm before the proverbial storm, right? In other words, it looks like they're starting to expand, and we've got a really good looking stochastic sitting, very pretty in the upper quintile. Let's just do a top down here. Let's go through to the weekly, see what's happening on the weekly side of things. Okay, and we're at all-time highs. Okay, the FTSE 100 is at all-time highs here, and we're not overboard either. Okay, so it's just consolidating here at these all-time highs, and we are looking, I think, quite nice. We're sitting quite nicely here in terms of the technicals. Let's just see how this plays out over time. Let's take a look at the euro. So now we're going to shift from indices. We're going to take a look at a currency. So let's just go back to the Copac. Okay. So the euro is a currency that was absolutely hammered over the last few years, to the point that it actually represents technical value. Okay. So we bring up the euro. And let's bring in the zero here, and you can see that it's turned up underneath. Now, I must be 100% clear. Edwin Copac, when he put the Copac indicator together, wasn't planning to use it with Forex. He was looking to use it specifically with stock indexes. So it was designed to be used with stock indexes. So using it with Forex, we have to take it with a sort of a pinch of salt. So the idea here is it does look as if it is in value territory, but I'm not sure 100% if we're using the right tool for this instrument. Point being, okay, the point being is that take it with a grain of salt. Now, what's happening is at 5 p.m. today, which would be 3 p.m. UK, we're going to have the Federal Chair, Jerome Powell, sitting in front of the Senate Banking Committee on Capitol Hill, and he's going to be testifying, and he's going to really, the way that the testimony works is he's going to give a sort of an introduction to the monetary policy and how he views it unfolding, and then he's going to be subject to a lot of questions by the senators, and those questions by the senators are really probing, and that can rattle the Forex markets in particular, because the monetary policy, a tight monetary policy is generally dollar supportive. It might act against the euro. So the Copac indicator there, just take it with a little bit of salt. All right, let's take a look at the euro and the monthly chart here. Okay, now you can see this is interesting. It's moved out of the value area. So there was a lot of value here. Here's value, right? So there still seems to be a lot of value that is pent up here because we haven't made it through to the growth area yet. Okay, and of course, the idea here is, well, it's got to make it through to the 80 area. Now, let's just talk about the economic fundamentals here. The Federal Reserve is still going to be tightening. It's going to be higher for longer. I think that is going to be a headwind for the euro. Okay, I think there might be a headwind here. What we have to be very careful about, what we've got to be careful about, and what we've got to be very savvy about is the forward-looking nature of the forward-looking nature of the markets. In other words, has the markets priced in the interest rate hikes to the point now that it's starting to look beyond that? As soon as the market starts looking beyond that, I think then the dollar starts coming down. I think then the majors start lifting. But there's a big question there. It's if the market is looking beyond, and I'm not convinced that we are looking beyond that just yet. Okay, but the euro here does look quite interesting. It's still on the sort of the value side. It's crossed over, hasn't quite got to growth yet. All right, let's take a look at the Nasdaq. The Nasdaq is an index that is also very sensitive to interest rates. So it's a good one to look at in terms of the monetary policy. So let's just bring that up. Okay, now this is very interesting. Take a look at this, guys. The COPOC indicator here is just ticking up. Okay, so we've just entered value territory here, just entered value territory on the Nasdaq. I'd like to see it just tick up a little bit more past the signal line here, but it's looking really, really interesting. Let's just make this on 0. All right, so we just got to take a look and see if this ticks up. Okay, just want to see if this ticks up. It does. The way that the COPOC actually, the two requirements for a signal on the COPOC is it has to be under the 0 and it has to tick up from under the 0. Well, we've got that. Let's just take a look at this on a value growth basis. All right, let's get rid of that. So this is interesting. There's a lot of value here, a lot of value sitting in the Nasdaq. See that? Good companies at cheap prices. Yeah, here's the growth. Now, this is going to be very much again dependent, very much dependent on what happens with the interest rates. The interest rate movements here are going to be very important with the Nasdaq. The Nasdaq's very sensitive to interest rates. So again, can the market see beyond the apex, beyond the tightening cycle? And I'm not sure we can just yet. The testimony tomorrow is going to be in front of the House committee. It's going to be very, very important. And then on Friday, by the way, we're going to have the non-farm payrolls. By the way, on Friday, we've got a live trade. We've got a live trade. Let me just let me give you the link for the live trade. I beg your pardon. All right, we're going to pop that in. There we go. The link for the live trade is now in. You can register for that if you'd like to join. All right, so you can see that the Nasdaq here is starting to show some momentum off of its value. We just want to see if this can get over here. A lot of potential here, but it really now depends on the interest rate environment. Let's take a look at the Nasdaq on a weekly basis, and you can see the higher trough followed by the higher peak, higher trough followed by the higher peak. So again, it's got this uptrend here, and what's very, very interesting to me is that it's just giving us a COPOC signal as well. So there's a lot of pent-up value in the Nasdaq. Good companies at very reasonable prices. All right, let me just take a look. There was a question here from Matthijs. Matthijs wants to look at Euro Aussie. It's not one that I look at all that often because it's quite hard to glean the fundamentals between the two currencies. We can just so the euro is picking up nicely against the Aussie here, Matthijs. Okay, there was a bit of a whipsaw signal here. So again, it's perhaps just a reminder to take this with a grain of salt. But this is a cross pair, so it's a little different to Euro US dollar. All right. Any other questions there? Please go ahead and type those in. Any other questions? Let's just take a look at Euro Oz on a weekly basis. So what you've got here, Matthijs, is you do have an uptrend. It's very difficult. Yeah, let's put it something like this. Yeah. Here we go. Okay, so it's an interesting one. Okay, maybe even on a broader basis. It is stuck in a range though. So it's stuck in a range here. As soon as you go into the crosses here, Matthijs, it's going to make your life a lot more complex than if you're moving away from the majors. Just you must understand that. This is sort of it looks to me as if this is in some sort of equilibrium. I'm not sure how much more, I'm not sure how much higher this can go. So just be aware of that. All right, I don't see any other questions coming in. So what we can do is we can wrap up here. And tomorrow we are going to be doing the Crypto Minute as well. So join me for that tomorrow. Thanks very much, guys. Have a good day ahead. Good evening. And I look forward to speaking with you tomorrow morning. Thanks very much, guys.